Good morning and welcome to today's episode of Crypto Insights. We're kicking off the day with a couple of major stories that are making waves in the market. I'm joined, as always, by my co-host who's been digging into the latest developments.
That's right. It's shaping up to be an interesting day, especially for gamers and options traders. Let's start with some exciting news from the world of gaming. A new battle royale shooter called Overtrip has just hit the Epic Games Store, and what's notable about this game is its connection to the Solana token.
Overtrip has been generating quite a bit of buzz, and it's not hard to see why. The game's creators have been touting its skill-based gameplay and token and NFT integration. It's launching on PC and Mac, which should give it a pretty broad reach. What do we know about the game's token and how it's been used?
From what we've seen, the token is part of the game's reward system, allowing players to earn and trade in-game assets. It's a model that's becoming increasingly popular in the gaming space, and it'll be interesting to see how Overtrip's implementation plays out on.
That's a great point. Community engagement is a key part of any successful game, and the use of tokens and NFTs can really help to foster that sense of ownership and investment. We'll be keeping an eye on Overtrip's progress and seeing how it impacts the broader gaming and crypto spaces, e.g.
Oh, absolutely. Speaking of broader market trends, we've got some news from the world of options trading. Derive Protocol has just crossed $100 million in value locked. What's driving this growth, and what does it say about the state of the market?
Well, from what we've seen, Derive's on-chain options market is experiencing record activity, which is consistent with the overall demand for crypto derivatives. We've also seen some big players making moves in this space, including a whale who collected over $1.6 million in premium from a BTC-covered call strategy.
That's a pretty savvy move, and it's not just the big players who are getting in on the action. We've seen traders depositing SUSD to borrow USDC and pocket the yield differential. It's a clever way to profit from the current market conditions.
These kinds of strategies are becoming increasingly popular as traders look for ways to maximize their returns. And with the rise TVL topping $100 million, it's clear that the protocol is becoming a major player in the options trading space.
Definitely. We'll be exploring these themes in more depth throughout the episode, including the growing demand for crypto derivatives and the impact of whales on the market. It's shaping up to be a fascinating conversation.
We were just discussing the latest trends in DeFi and the growing importance of community involvement in decision-making processes. Speaking of community-driven decisions, there's been a significant development in the Jupiter DAO.
That's right. The Jupiter DAO has just passed a massive $860 million airdrop vote, dubbed Jupulary. But what's interesting about this vote is that it's actually a revised proposal. The initial vote failed to gain community favor, but the revised version managed to garner over 87% of votes in favor.
So what changed between the two proposals? It's clear that the community had some concerns with the initial plan.
Exactly. The main difference between the two proposals is how the tokens will be distributed to users. The revised proposal includes additional checks to prevent tokens from going to what they call mercenary airdrop farmers. Essentially, they're trying to ensure that the tokens end up in the hands of genuine community members who will contribute to the growth of the ecosystem.
That makes sense. It's not uncommon for airdrops to be exploited by individuals who are only looking to make a quick profit. By implementing these checks, the Jupiter DAO is taking a step in the right direction to maintain the integrity of their community.
Absolutely. And it's worth noting that this airdrop is scheduled to take place over the next 2 Januaries, with a link to check eligibility becoming available later this month. The actual airdrop is expected to happen the following month.
I see. So it's a bit of a waiting game for the community, but it's clear that the Jupiter DAO is committed to getting this right. Building on what we discussed earlier, this development highlights the importance of community involvement in decision-making processes. It's not just about the outcome, but also about the process itself.
That's a great point. The fact that the initial proposal failed and the community was able to provide feedback and revise the plan demonstrates the value of this decentralized governance model. It's not always easy, but it's clear that the Jupiter DAO is dedicated to creating a fair and transparent ecosystem.
We'll be keeping an eye on this story as it develops. And in related news, Solana DeFi exchange Jupiter has also received the green light for airdrops after their first $1.7 billion vote failed. It's clear that the Jupiter DAO is learning from their mistakes and adapting to the needs of their community.
Yes, and it's not just about the Jupiter DAO. This trend of community-driven decision-making is becoming increasingly popular in the DeFi space. We're seeing more and more projects prioritize transparency, fairness, and community involvement, and it's going to be interesting to see how this shapes the future of the decentralized finance.
So, we've been talking about the potential for institutional investment to drive up the price of Bitcoin. It looks like some major players are taking notice, with Amazon's being the latest to receive a proposal to get in on the action.
That's right. A group of shareholders led by the National Center for Public Policy Research has submitted a proposal urging Amazon to create a Bitcoin treasury reserve. They're suggesting the company hold at least 5% of its assets in Bitcoin.
Now, this isn't the first time we've seen a major corporation being pushed to invest in Bitcoin. We've seen similar proposals at companies like Microsoft, where shareholders are also considering a Bitcoin proposal. It's clear that some investors see the potential for Bitcoin to be a hedge against inflation and market volatility. It's meant to help to start the FX statement, okay?
And it's not just the investors who are taking notice. We've seen a growing trend of companies incorporating blockchain technology into their operations. For example, take the gaming industry with Zoppel, launching on the Ethereum network Scale. It's a mobile shoot-'em-up game that's taking advantage of Scale gas-free invisible blockchain. But
that's really interesting. We've talked before about the potential for blockchain gaming to disrupt the traditional gaming industry. With the rise of Web3, we're seeing more and more developers exploring the possibilities of blockchain-based gaming, which...
Exactly. And it's not just about the technology itself, but also the business models that come with it. Web3 gaming allows for new revenue streams such as token-based economies and NFTs. It's an exciting space to watch, and we'll be keeping a close eye on developments like Scalpel and Scale.
Building on what we discussed earlier, it's clear that institutional investment and mainstream adoption are closely tied. As more companies like Amazon and Microsoft consider investing in Bitcoin, it's likely to drive up confidence in the market and attract even more investors.
Speaking of confidence, it's also worth noting that the proposal to Amazon highlights the potential for Bitcoin to be a store of value. The think tank argues that converting Amazon's assets into Bitcoin would provide a hedge against inflation and market volatility. It's an interesting argument, and one that we'll be watching closely as an argument that most people wouldn't think comes that are worth settling. It is even clear that there are enough people come if the...
We'll continue to follow this story and see how it plays out. In the meantime, it's clear that the conversation around institutional investment and mainstream adoption is only just getting started.
Building on what we discussed earlier about the increasing institutional interest in tokenized assets, it seems like another major player is entering the space. First, Abu Dhabi Bank has signed a memorandum of understanding with Libre Capital, a tokenization firm, to explore collateralized lending using tokenized real-world assets.
That's right. This partnership is significant because it marks one of the first times a major bank has expressed interest in using tokenized assets as collateral for lending. According to reports, Libre has already issued around $150 million worth of tokenized versions of funds from major financial institutions like Brevan Howard, Hamilton Lane, and BlackRock.
And what's interesting here is that Libre has proposed using these tokenized assets, which they call blue-chip RWA tokens, as collateral on MakerDAO, a decentralized lending protocol. This could potentially create a new avenue for institutional investors to access liquidity in the decentralized finance space.
Absolutely. This development is a testament to the growing interest in tokenized assets and their potential to bridge the gap between traditional finance and DeFi. It's also worth noting that this partnership is happening in the UAE, which has been actively promoting itself as a hub for blockchain and cryptocurrency innovation.
Speaking of innovation, it seems like the meme coin space is heating up again. We're seeing some significant price movements in dog-themed meme coins like Baby Doge and Nero. And it's not just those coins. A Bitcoin-based meme coin called Dog Token has just hit an all-time high price.
Yes, it seems like the crypto community's love for dogs is still going strong. Dog Token, which is a so-called Runes token, launched in April and has been gaining traction ever since. According to data from CoinGecko, its price reached an all-time high of 96 cents late Sunday.
And what's interesting here is that this price movement is happening alongside other dog-themed meme coins. It's almost as if the market is experiencing a nostalgia for the early days of Dogecoin, which was one of the first meme coins to gain widespread attention.
Dogecoin, that's a good point. The meme coin space is known for its unpredictability, but it's clear that there's still a lot of interest in these types of assets. Whether it's a clever marketing ploy or a genuine expression of community enthusiasm, meme coins continue to capture the imagination of crypto enthusiasts around the world.
As we wrap up today's show, I think it's worth revisiting the conversation we had earlier about the EU countries struggling to implement MiCA regulations by the end of the year.
That's right. It seems like a pretty tight deadline, especially when you consider the concerns raised by crypto industry trade bodies about the feasibility of processing crypto asset provider applications under existing time constraints.
Exactly. I think we'll see a few countries scrambling to adapt their local laws in the coming months. Belgium, Italy, Poland, Portugal, Luxembourg, and Romania are just a few of the member states that still need to implement MiCA.
And what's interesting is how this regulatory uncertainty might impact the broader crypto market. We've seen time and time again how regulatory changes can cause market volatility.
Speaking of volatility, let's talk about the potential impact of Google's new quantum computing chip on Bitcoin security. We touched on this story earlier, but I think it's worth exploring further.
Absolutely. The idea that a quantum supercomputer like Willow can complete tasks in 5 minutes that would take classical computers millions of years to figure out is both impressive and unsettling.
Unsettling indeed, especially when you consider that Bitcoin uses algorithms like SH2456 for mining and ECDSA for signatures, which could potentially be vulnerable to quantum decryption.
But as we discussed earlier, it's not all doom and gloom. While quantum computing does pose significant threats to current security systems, it's worth noting that the crypto community is already exploring ways to mitigate these risks.
That's right, and I think that's a key takeaway from today's show. The crypto space is constantly evolving, and while there are certainly challenges ahead, there are also opportunities for growth and innovation.
So, as we look to the future, what are some key takeaways from today's stories? Well, first and foremost, regulatory clarity is essential for the growth and adoption of crypto.
Secondly, the emergence of quantum computing is a reminder that crypto security is an ongoing concern and one that requires constant attention and innovation.
And finally, despite the challenges and uncertainties, the crypto market remains a dynamic and rapidly evolving space, full of opportunities for investors, developers, and innovators.
That's all for today's show. Thanks for tuning in, and we'll catch you again tomorrow.
Until then, stay informed, stay vigilant, and stay ahead of the curve in the world of crypto.